All right, making another video just to give an update on the positioning. It was last night after bar close. Our systems went long and confirmed a 50% minimum allocation or 100% if you've bought in 50% on bottom week or one of the two subsequent weeks afterwards, right here. And so the dominant assets at first between the big three that we choose, Bitcoin, Ethereum, and Solana, it was favoring Solana a little bit more. And then, of course, the last couple of days, Ethereum started to gain traction. So we were thinking, okay, split BTC Ethereum. And then we were analyzing Hyperliquid. And we ultimately decided to get in there on Hyperliquid. And so that's our dominant major at the moment, and that's what we're working with. And you can see I have the liquidity rate of change lag on here just to reference this later. I do have a few charts that I pulled up here that I wanted to go over. Some of this stuff is from our that we use in our strategic valuation systems. A lot of indicators that we gather from Alpha Extract. I don't know who the guy is that is behind it or the group of guys, but I know that they are from the real world. So shout out to you guys, and I appreciate it again for the free metrics that we can get on here. But to the point, we do have the cycle bands analysis from them, and basically we can zoom in here and selectively pick what we're looking at. Let me reset the zoom real quick. Reset, yeah. So if I zoom in here, you can see that where we're at is, we're below the mid line on these cycle bands, but we haven't touched the bottom or dipped below the bottom necessarily. And so that's the situation with that. Now, this kind of goes into a point that I saw with Benjamin Cowan and his videos where, hold on, let me get that real quick. Pardon me, as a spam call on the office phone. Like I was saying, Benjamin Cowan has been releasing a couple videos lately. His base case is still bearish, and his point against a lot of indicators that we see that indicate, okay, we are massively oversold here. We've already touched the lows. We need to come higher. Things like that, like these as well. Not like that one, but like this one, definitely the STH MVRV indicator. He believes that there's a lot of indicators that leave a lot to be desired in terms of downside momentum and pressure. And this is one of those examples. For the short term, this can definitely touch this lower band and then come back up a little bit and then drop down. But it could also just keep going lower because it hasn't. You can see in the last cycle, COVID, previous cycles as well, it's dipped below, I believe, what is this, 0.10? So that's what we've noticed with that. And I just want to look over these. We have the thermocap multiple, not that great. It's really losing its I think it's suffering heavily from alpha decay. Let me go ahead and reset my Epic pen so I can get this right. Okay. And if I boot it up, it should work. There we go. Like I was saying, this is kind of the lows that we sweep that one, or not one, this would actually be like 60 something, but basically we're kind of testing these lows that we broke through for our major run for the last 3 years. And this we're looking at there. We have the liquidity power law model. This one I've always looked at a lot, and seeing it in this bottom zone here is interesting. Assuming that liquidity remains the fundamental driver, we are seeing what we should reasonably expect to be the worst of the worst, at least temporarily, right? Now this matches up with the last, not last bear market, but definitely late 2023 when we had a liquidity divergence from price. The last bear market was right in the middle. It kind of consolidated to the middle there. You can see the last few bear markets didn't really go as low. Once you get past before 2018, that's when things were different, when the relationship between the global liquidity and Bitcoin was structurally different. We have the fair oscillator, the liquidity fair oscillator, And this one's actually showing that, we have gone quite a ways up in this little mini formation of a bottom here. We had a bottom signal from that, and now we have about, we're almost halfway up to this max threshold. Now, What I will say is that the last rally, if you want to call it that, we grinded sideways and hit a couple highs and went low. We went up high here halfway, and then we kind of just grinded downwards as price grinded upwards until we crashed. We could see a similar event, something like this, play out with this indicator, but that is where we're at currently as it stands. Same thing here. This is quite a noisy one, but it does provide signals and tries to do its best, and you can see that we're already almost up to a sell signal if we continue at the pace that we're going, which would limit the amount of upside we should reasonably expect to have. Perhaps, I think GLI Fair Value from Rob Jonesy is around almost, I think it's in this range here. That's what I believe it is. I mean, we could reasonably expect price to not even make it that high and for us to be in a structural bear market afterwards. We shall see, though. MVV Z-score. This one, it seems to have tapped into the high value zone, but it seems to be confirming a bounce out of that, at least temporarily. Now, you can argue it's a situation like this. Maybe a situation like this. This is kind of what my case is, We have a situation like this where, we're coming out of it and we're going to have a little bit of a rally into some bear or sideways chop structure. Now, that was, of course, coinciding with COVID and the COVID crash, but you can see this kind of situation is kind of what I'm thinking that we're at here. And that kind of coincides with Ben Cowan, I think. Sometimes I'm not really sure what his actual base case is. He talks about a lot of the possibilities and what seems likely, and most of the time he is correct, as of late. Let's see. Yes, we have the CDD. Nothing too special here. I just like that we're at the lowest value that we have had since 2023, since we were rising out of 2023, 2022. That's worth noting. And of course, some of these main metrics, we do have the short-term holder SOPR indicator, spin out for profit ratio indicator here, and we are coming out of this range. Is it just one of these? Pardon that. Is it just one of these right here, or like this right here, or are we starting an uptrend? Remains to be seen, but what we do know is that we do have the positive momentum moving in the upwards direction with this one. And perpetual funding rates has come back positive after printing basically printing into the lows. When we were reading this a week ago, it was like down here. It was like as low as this one was from the tariff crash. It was one of the lowest readings we had seen since the last bear market. But there is that, and it is coming back up. And if we look at the adjusted funding rates, if I can get this clicked, yeah, still negative, but there's some upwards momentum. We'll see how that plays out for us here. Now, this is one of those indicators where there's a lot to be desired. If you have a COVID style-ish bottom formation, we could definitely just sit down here for a little bit longer. I think this rally can happen, right? And similar to this situation right here, we had this price action, which, to put a reference, it's this point right here. Let me go ahead and move this out of the way. So this price action here, right? We had the rally out of the tariff crash, and then we kind of rounded off, right? And when you're on we're on logarithmic scale. I think this is a better way to put the chart to visualize and make it work together. So yeah, we had this kind of rally, this kind of performance, and that is where that's what I'm pointing at over here in this circle. And you can see that the long-term holder to short-term holder spin off a profit ratio actually was in a downtrend range that entire time, right? You can see that even when the recovery of the crash, right? We only had a spike, and then we were kind of trending up. We had a really odd reading, and then the trend was really weak, and we really never entered a long-term uptrend that was solidified from that. And then we went down. And where did it flip at? It flipped here, and this was a point where we were like in this zone, and we had even had upwards momentum and had reached a new all-time high in Bitcoin. And it came down. So I guess what's my point with that? My point is that we can rally in price while this stays in the red and does not come up above and does not enter an uptrend, because this has a lot of momentum. It has a lot to go. So I think that this can really, for the next 2 months, we can really start to get some prints out here this far in the red, extend and make this indicator more desirable and forming a bottom. And then we go lower, maybe. And then as we go lower, we kind of get an extended bear market, and then things start to change eventually. I think that's what we should look for in that indicator now for we mentioned this one earlier. This one is coming up strongly. It can always just come down. I'm sure there's technical analysts applying to this indicator of all things. I said, rejected. It could happen. It could happen. The line drawers, the very talented people who draw lines on charts, could be correct. This could be it. This could be a rejection point. We could go straight down from here on out. And our trend entry is going to be another bad one, which is fine. Happens all the time. But even if you look here, we zoom into this part of the chart. What exactly are we getting rejected from? Besides like just TA and all that stuff, you could have argued, right, that this was the rejection point. Well, that seems more feasible to me, and we blasted through that. Another one you could draw, some bullcrap like this. And this price action, I believe that would get us to maybe 90K at most, which with one of Ben Cowan's resistance indicators, that coincides. But like I said, we'll see. Hype is the current asset we've been allocated to last few days. It's been doing good returns. Ethereum is something else too that's dominant. Ethereum, Hyperliquid, and Bitcoin. You can do Solana. In the server, if you have your own system and you're running it, of course you're going to act in your best interests. We'll see if this rally materializes into anything. Hyperliquid, especially with how everything's shifting around, I think in DeFi is kind of proof that there is most likely another rally in the books underlying in crypto. Like I said, it cannot happen, but it seems like it's most likely. And another guy that's been bullish on Hyperliquid, I think since like here. I know he got in before it pumped like crazy. People started to pay attention, longed the top, got screwed. Some people were buying the dip on it, and now we're up here. And I think it was Capital Flows. Capital Flows on YouTube and Substack, I believe. Yeah, that's exactly who it was. I can drop a link to him in the description. If anybody comes across this video at some point and wants to find one of the people that I learn from occasionally. But yeah, I think that's it for reporting on the analysis and basically what we've come across. And I think that'll do us for today. So God bless.